Bad banking behavior, the secret fees lurking in your checking account. In today's cover story, Detroit's bankruptcy is hurting investors miles away from Michigan. Plus, why soda is becoming a harder sell. And here's man's new best friend. Why more chickens and roosters are moving away from the farm. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. It's Monday, August 12th. I'm Angela Miles, and today's first look is the summer rally slipping away. The major indices all fell Friday, ending down for the entire week. It's the first weekly decline since June as traders fret over the Fed's next move. Gold was a gainer by $4. Oil added on $2.63. Apple shines in its patent case. The International Trade Commission ruled that Samsung infringed on iPhone patents owned by Apple. Samsung is expected to appeal. And AOL has turned into a chatter stock. Shares rose 2% Friday on speculation the internet company is planning drastic cuts or may shut down its local news sites called Patch. Scott Chalabi of Trian Group joins us on this Monday morning. Happy Monday morning to you, Scott.
Good morning.
How critical will the inflation numbers and retail earnings this week be to traders?
It's going to be very critical with the Fed's dual mandate. We have to keep an eye on inflation. I don't think we've got inflation. I think we've got disinflation. Bernanke mentioned that in his last speech. Something to watch going forward. We actually might be in a deflationary cycle, so keep your eyes glued to the inflation numbers.
China plays were popular last week with people buying the metals because of some growth in China. What will be your play this week? What do you see happening here?
Well, I tell you what, I think you should stay away from China. China leads us in manufacturing. Only one thing, their economic numbers. We lead them in manufacturing, everything else just by a hair. So be careful about China. At the end of last quarter, 3 of their largest banks shut down their ATMs over a weekend. You couldn't take any money out. Something's going on there, and I'm not quite sure.
Ooh, good to know about that. What about the low volume and low volatility in the market? What will that mean for trading?
Well, let's just call that August. It happens every year. A lot of folks go on holiday in Europe, but I also think that with September coming up, we've got the German election September 22nd. So we're going to wait and see what happens with that as far as the EU goes. I think more bad news comes out of China. And then, of course, we've got October sequester cuts and Obamacare in January.
What would you do with your money right now?
I think I'm still playing the 10-year. That's the true serum. I'd stay away from equities. They're not really telling you very much. Be careful about getting long bonds. You know, we below 275, we think that that's a good rate, and above 250, we want to get out. So 275 to 250 is the rate we're playing in bonds.
Thank you, Scott, and have a good trading week.
All right, you too.
A ripple effect of Detroit's bankruptcy is being felt in Michigan communities far from the Motor City. As our cover story explains, they are not far enough for some creditors of municipal bonds who are nervous about getting repaid. County officials in Flint, Michigan, 60 miles from Detroit, sought to raise $54 million for sewer and water improvements by selling municipal bonds. But investors demanded higher interest rates in the wake of Detroit's bankruptcy. Potential municipal bond investors issued the same demand in Saginaw County, 100 miles northwest of Detroit, and again in the city of Battle Creek, 120 miles to the west. In each case, municipal bond offerings had to be postponed and public works projects delayed. The reason? Dale Rosenthal says they're all in Michigan.
There is a big cost, still unknown, to dealing with Detroit. And so it's not clear how much the state would be able to step in for a city that may not be in Metro Detroit, but is still implicitly, or possibly guaranteed by the state.
Investors are getting skittish because they're seeing what Detroit's emergency manager, Kevin Orr, is offering to the holders of Detroit's debt, which is sort of pennies on the dollar.
Funding delayed could itself have a ripple effect on public works projects and private sector development.
This does discourage businesses from possibly moving, expanding. It makes job creation more difficult because your infrastructure is not at as high a quality as competing municipalities outside of Michigan.
However, the $3.7 trillion U.S. municipal bond market overall does not seem to have slowed down. Norwalk, Connecticut sold $21 million in general obligation bonds August 1st. And across the country, other communities have raised a combined $8.6 billion since Detroit's bankruptcy.
It's also really going to come down to what's going on in those individual communities and their ability to pay. And if investors can feel that they can make a decent return and it's in the best interest of that community, I think that those sales will start to move forward.
However, independent research firm Municipal Market Advisors says investors are pulling money out of bond mutual funds, seeking better yields elsewhere. Rising interest rates accompanying the Federal Reserve's tapering of its bond buying program are other contributors to this trend.
A landmark trial involving Toyota continues today. The car company is facing a lawsuit by the family of a woman who was killed when her Toyota Camry unexpectedly accelerated to 100 miles per hour in 2009. The argument in this case is whether Toyota is liable for a safety device it failed to install to stop the acceleration. The jury is being asked to award the family with $20 million.
The JCPenney CEO saga continues. Activist investor Bill Ackman wants the chairman of the JCPenney board, Thomas Engebus, to exit. But the chairman tells reporters Ackman's actions are disruptive to the company's recovery. Last Thursday, Ackman urged the board to quickly replace JCP's interim CEO, Mike Ullman. Ackman also saying that the retailer is flying blind. Ackman manages the Pershing Square Capital Hedge Fund, which owns nearly 18% of JCPenney. JCP stock closed Friday at its lowest price in a decade, $12.87.
BlackBerry's board may be changing its tone about going private. Reuters reports the wireless company is warming up to selling to a private buyer. The report sparked a more than 7% rally in the stock Friday. Analysts warn it could be difficult to find a buyer for that troubled company. The launch of its BlackBerry 10 operating system did not go as planned. The company reportedly is looking into other options, such as licensing BlackBerry 10 software or finding a partner.
President Obama is vacationing this week in Martha's Vineyard, but before taking off Friday, he held a news conference and talked a bit about the process of finding the next Federal Reserve chairman. Mr. Obama says he has a range of outstanding candidates and confirmed that Janet Yellen and Larry Summers are both in the mix.
A critical part of the job is making sure that we keep inflation in check, that our monetary policy is sound, that the dollar is sound. Those are all critical components of the job.
The news conference followed a closed-door meeting on government surveillance. CEOs from Apple and AT&T were among those who attended. The president is opening an investigation into NSA surveillance programs.
The former J.P. Morgan trader known as the London Whale may be off the hook. Reports say Bruno Ixel is not likely to face charges related to bad trading bets that racked up more than $6 billion in losses for J.P. Morgan Chase. Ixel is called the London Whale because he was based in J.P. Morgan's London office and put on monster-sized trading positions. The Justice Department and SEC are still investigating the bank, but the whale trader is said to no longer be the focus.
Things are looking up in the U.S., particularly if you are Bruce Flatt. He's the CEO of Brookfield Asset Management and is often referred to as the Warren Buffett of Canada. Brookfield already has $100 billion in U.S. assets, and Flatt tells CNBC there continues to be a lot of investment opportunity in America. Flatt says he's bullish on the U.S. because housing, retail, and manufacturing, he says, are all making a comeback, and he sees possibilities in the shale gas revolution. Flatt also mentioned he's looking for value plays in Europe and emerging markets.
It's always fascinating to know how billionaires are investing their money. Insider Monkey reveals Warren Buffett and others are buying shares of DaVita. The company owns kidney dialysis centers. Billionaires are also bullish on Sirius Satellite Radio. VeriSign is another popular stock with one percenters. It's an internet registry services company, and billionaires are big on credit card company Visa.
Investors are keeping their eyes on Priceline. The stock is closing in on a milestone, $1,000 a share. In its latest earnings, Priceline notes tremendous momentum going forward. Strength in Europe helped revenues. Noodles & Company, which went public earlier this summer, is trading lower after its first set of earnings failed to increase investor appetites. The company said it expects growth of about 3%, and that's less than investors had anticipated. While White Wave Foods beat Wall Street expectations, the company stands by its full-year forecast.
Soda sales are slipping. Sales numbers at beverage giants Coca-Cola, Pepsi, and Dr. Pepper Snapple all dropped in the second quarter. Beverage Digest reports Americans have been drinking less soda since 1998, while bottled water, tea, and sports drinks are on the rise. Branding specialist David Johnson says soda could go the way of cigarettes.
We're seeing the decline really in the beverage industry, like we saw the decline in smoking, the decline even in alcohol use and everything. We're now seeing it here, especially with cities going after it, with so many people talking about anti-obesity laws, anti-obesity measures.
Pepsi and Coke did not return our request for comment. Beverage companies are not alone with a sales setback. Producers of sheet aluminum used for pop cans reportedly are doing more business overseas in search of better profits.
Back to school spending is off to a slow start. Revenue at stores open at least a year rose 3.8% in July, but that's the slowest pace since March. That's according to a study by the International Council of Shopping Centers. In June, sales were up 5.5%. Consumers, it appears, are shopping for summer bargains instead of picking up new fall clothing.
Turning to the economic calendar for today, it's the Treasury budget on the earnings calendar. The retailers roll in with American Apparel, Dillard's, Cisco, New York & Company, and Perry Ellis. Still to come, coup d'etat, why more Americans are passing on conventional pets. Plus, key retail earnings are out this week. The stocks traders want to buy or sell, and how added fees are hiding in your checking account. That's right after the break.
No interest credit cards are making a comeback. Bankrate.com reports that 4 out of 10 cards offer some period of zero interest. The tactic disappeared during the recession, but has made its way back as card companies face increased competition.
Even as interest rates came down during the Great Recession, we didn't see these 0% offers popping up right away. And the reason for that is because card issuers were very skittish about taking risk, particularly with the deep economic slump that we were in.
Greg McBride of Bankrate.com tells us 0% rates are only trickling back in and are mostly targeted toward certain customers.
Banks are attaching hidden fees to checking accounts and more. It's all uncovered in a new study by CardHub. Odessi's Papadimitriou, founder of CardHub.com, is Skyping with us this morning. Glad to have you on the show.
Oh, thank you so much for having me.
You found that the average checking account has dozens of secret fees. How do the banks rank?
We were shocked to find out that the average checking account has 30 fees. And on top of that, some banks do a great job in disclosing those fees and making them accessible to consumers, like Capital One and Fifth Third Bank. And some banks at the bottom of our list, like the Huntington National Bank and M&T Bank, do a horrible job in terms of making their disclosures obvious to consumers and easy to digest.
What else surprised you about the study?
One of the things that we were surprised is that the largest banks, which you would expect to be more secretive, if you will, are the most transparent. And I think that's an outcome of the Great Recession, where the largest banks got the most scrutiny. And therefore they became much more sensitive in terms of bringing out the information and being transparent with their customers. Whereas the smallest banks have kind of are still trying to, if you will, trick consumers into thinking that there are not that many fees or and into signing up for their products when in fact there are a lot of fees that they're not telling consumers up front.
What are ways to get around these fees?
Some of these fees you can get around, like a monthly fee. Most banks will, with a minimum balance requirement or a direct deposit, you can get around them. But some other fees, like a wire transfer or a cashier's check, or when you use your ATM card if you travel overseas, those fees are very hard to get around.
Realistically, can anything be done?
Well, I hope so. We were shocked to find out that the disclosure and the regulatory landscape around checking accounts and banking products is decades behind where credit cards are. We take for granted to have a unified type of disclosure on credit cards. But when it comes to checking accounts, it is completely up to each bank to disclose what they're going to disclose, when they're going to disclose, and in what format they're going to disclose. So it's completely the Wild West going on there.
Thank you for bringing us your study.
Thank you so much for having me.
Coming up, why Americans are chickening out on a money-saving venture, and shopping for stocks, the department store that is already attracting attention in the options market ahead of earnings. That's coming up later in Chart Talk. Well, who knew that raising your own chickens on your apartment rooftop or suburban backyard would be considered trendy? As Kai Sisson reports, it's a growing movement throughout the country, but the excitement of having a pet chicken may eventually become foul.
While raising your own chickens has the perks of plentiful fresh eggs and maybe some pet companionship, many city dwellers are quickly discovering they are unable to afford, care for, and handle the barnyard birds' messy nature. As a result, unwanted roosters and hens are being dumped at the nation's shelters and animal sanctuaries at an alarming rate.
There is such an overflow of roosters all over the country.
Alexandra Caswell says the farm sanctuary north of Los Angeles is at capacity with roosters, and the organization's 3 locations across the country took in over 400 chickens last year, more than they have ever received.
We're currently now at capacity with roosters, and we have a national adoption program through our website.
Part of the problem is when ordering chickens for personal use, most suppliers, such as MyPetChicken.com, ship them through the U.S. mail, alongside your cable bill and birthday cards. The hens come artificially bred, that's food industry speak for ready to lay eggs. This causes reproductive problems for the young chicks that prevent them from producing eggs after age 2, leaving many people at a loss for what to do when the eggs stop coming. Caswell says that when mail-order chickens arrive at your doorstep, roosters are thrown into the mix as fillers, and because only female chickens can lay eggs, people have no use for them.
A lot of cities in Los Angeles are becoming approved for hens, but not roosters. So those roosters, they can't keep them. They end up being dumped at shelters, or they are actually just released out into the city.
And this problem can only get worse as the trend continues to grow. BackyardChickens.com is a website exclusively dedicated to the community of chicken owners. The site opened in 2007 with just 50 members and has grown to more than 200,000. Owner Rob Ludeau said in an email that there are many good reasons to own chickens, including self-sufficiency and sustainable food grown humanely. Both Caswell and Ludeau believe that the trend has significant staying power.
A lot of people are trying to avoid, antibiotics. They're trying to not give money to factory farms, but again, they're affecting roosters.
Cities nationwide have adopted ordinances that allow for small flocks of hens, and Caswell believes people will continue to raise their own chickens, but she wants to encourage proper training and adopting before buying.
So we also highly recommend adopting chickens and roosters rather than ordering them through the mail. That way they're getting adult animals rather than babies, and they know what the sex is of the animals.
Reporting in Los Angeles for First Business News, I'm Kai Sisson.
Information about adopting chickens and rescued farm animals is available at farmsanctuary.org. Still ahead, this is a huge week for earnings coming from retailers. A preview of stocks to watch in the shopping sector are coming your way next. In Chart Talk this morning, a number of retailers report earnings this week. Andrew Keen, president of KeenOnTheMarket.com, is with us now. He's watching the charts. Let's start with Macy's. What do you see happening here ahead of earnings and post earnings?
Yeah, if we look at Macy's, I mean, the chart doesn't look that great. It's been stuck in this range between 46 and 50. But on Friday, there was a big customer buyer of unusual option activity. A trader bought the Macy's September 49 calls. They paid about $1.45 for these calls. So someone thinks that Macy's can get maybe to 52-week highs, breaking that $50 level. I bought these calls as well. The stock did pop a little bit. I think Macy's can push through this 49, maybe possibly through 50 on earnings.
What will you specifically as a trader be listening to when these earnings come down?
Yeah, as I looked at Macy's, you know, their valuation's a little bit high compared to Dillard's, DDS, but it's also cheap compared to Saks. The thing I like about Macy's, no European exposure, no exposure in China. They're U.S.-based. U.S. companies have been very, very strong this year. We look at global growth. You know, U.S. is where, you know, I want to be invested in companies that don't have that European exposure.
Foot Locker is another big one. What do you see here?
Yeah, I guess this is kind of a pairs trade because I'm long calls in Macy's, then I'm long puts in Foot Locker. On Friday, actually on Wednesday and Thursday, we saw a slew of put activity. August 35s, August 36s, September 35 puts. Foot Locker sold off really hard, got to that 200-day moving average around $34, came back a little bit, got to $34.70. Unlike Macy's, You know, Foot Locker has huge European exposure. I think they have a lot more competition. They're in Europe, they're in Canada, they're in Asia, they're in China. So they have more exposure than Macy's does. So it's kind of a little bit of a pairs trade here. I'm long the SEP 50 puts. I think if Macy's breaks that 200-day moving average at 49, it can move down to about $47.
Thank you, Andrew.
Thank you.
Coming up on the show tomorrow, the vacation home rental business is hot this summer. The VP of HomeAway will be here with late summer deals. Don't miss it. Before we go, we want to take a minute and recognize someone on our staff.
First business starts now! ! New line.
John Koska has been captioning our program for the last few years, a mysterious process that makes it possible for the hearing impaired to enjoy our show. John is going back to school in a graduate program at UCLA. We will miss him, his attention to detail, and his good grammar. Best wishes, John. And from all of us at First Business, thank you for watching.